Question 1. Which of the following is true regarding the coinsurance clause in commercial property insurance? A. It requires the insured to maintain a specific percentage of the property's value in coverage to avoid a penalty on claims. B. It is only applicable to policies with a replacement cost valuation method. C. It automatically adjusts the insurance amount annually based on the property's market value. D. It eliminates the need for the insured to prove the value of the damaged property in case of a claim. Answer A. It requires the insured to maintain a specific percentage of the property's value in coverage to avoid a penalty on claims. Explanation. The coinsurance clause in commercial property insurance is designed to encourage policyholders to purchase adequate coverage. Under this clause, the insured must maintain a certain percentage, typically 80%, 90%, or 100% of the property's replacement value. If the insured fails to meet this required amount, they will face a penalty in the event of a claim. The coinsurance penalty means the insurance payout will be reduced in proportion to the amount of insurance actually purchased compared to the required amount. This clause is independent of whether the policy uses replacement cost, actual cash value, ACV, or other valuation methods. Option B is incorrect because coinsurance applies to all coverage types, not just replacement cost. Question 2. What is the main difference between an umbrella insurance policy and an excess liability insurance policy? A. Umbrella policies provide broader coverage and can cover claims that are not covered by underlying policies, whereas excess liability policies only provide higher limits for specific types of coverage. B. Umbrella policies can be used to cover workers' compensation claims, whereas excess liability policies cannot. C. Excess liability policies have a lower premium due to their narrower coverage, while umbrella policies are more expensive but provide broader protection. D. Umbrella policies always come with a deductible, while excess liability policies do not. Answer A. Umbrella policies provide broader coverage and can cover claims that are not covered by underlying policies, whereas excess liability policies only provide higher limits for specific types of coverage. Explanation. An umbrella insurance policy provides broader coverage than excess liability insurance. It can extend to claims not covered by the underlying policies, such as general liability or auto insurance, including some types of personal injury and property damage. It also increases coverage limits beyond those of underlying policies. Excess liability policies, on the other hand, increase the liability coverage limits of existing policies, but do not offer broader coverage. They simply provide additional limits for specific coverage, such as general liability. Option B is incorrect because both umbrella and excess liability policies cannot cover workers' compensation claims. Option C is incorrect because while umbrella policies may be more expensive, this is not always due to broader coverage, and excess liability policies are typically less expensive for the same level of protection. Option D is incorrect because neither type of policy necessarily involves a deductible, though some umbrella policies may. Question 3. Scenario-based question. Mr. Davis owns a small manufacturing business and recently purchased a commercial general liability CGL policy. While using the company's forklift to unload goods, one of his employees, MS Walker, accidentally drops the heavy item onto the foot of a customer who is visiting the business. The customer suffers an injury and demands compensation. What should Mr. Davis do under the terms of his CGL policy? A. Mr. Davis should immediately contact his workers' compensation insurance carrier to handle the injury to MS Walker. B. Mr. Davis should contact his CGL insurer to report the bodily injury claim and ensure coverage for the injured customer. C. Mr. Davis should deny the claim as it involves an employee and not the customer. D. Mr. Davis should handle the claim personally without involving his insurer, as the injury is minor. Answer. B. Mr. Davis should contact his CGL insurer to report the bodily injury claim and ensure coverage for the injured customer. Explanation. Under commercial general liability CGL policy, coverage is provided for bodily injury or property damage caused to third parties, such as customers, while they are on the insured's premises or involved in the insured's operations. Since the customer was injured as a result of the business's operations, Mr. Davis should immediately report the incident to his CGL insurer. The CGL policy typically covers both bodily injury and property damage liability, including the defense and any potential settlements associated with the claim. Option A is incorrect because the injury is to a customer, not an employee, and workers' compensation would cover the injury to MS Walker, not the customer. Option C is incorrect because the CGL policy specifically covers bodily injury to customers, not just employees. Option D is incorrect because it is essential to report all claims to the insurer to avoid complications or loss of coverage. Question 4. Which of the following best describes the purpose of the business income coverage under a commercial property insurance policy? A. It covers the cost of repairing or replacing physical property damaged by a covered loss. B. It provides reimbursement for lost income during the period of restoration following a covered loss. C. It covers the medical expenses for employees injured at the business location. D. It compensates the business owner for the loss of business due to changes in market conditions. Answer: B. It provides reimbursement for lost income during the period of restoration following a covered loss. Explanation: Business income coverage is designed to protect against lost income resulting from the inability to operate after a covered loss, such as a fire or theft. This coverage helps to reimburse lost earnings during the period of restoration, the time it takes to repair or replace damaged property so the business can return to normal operations. Option A refers to the property damage coverage portion of a policy, not business income. Option C refers to workers' compensation insurance, not business income. Option D is incorrect as it refers to market risk, not an insurable event covered under property policies. Question 5. Which of the following exclusions is typically found in a commercial general liability (CGL) policy? A. Coverage for bodily injury caused by an employee's negligent actions. B. Coverage for property damage arising from a product defect. C. Coverage for personal and advertising injury arising from the insured's own media content. D. Coverage for bodily injury sustained by an employee in the course of their work. Answer: D. Coverage for bodily injury sustained by an employee in the course of their work. Explanation: Bodily injury sustained by an employee while at work is generally excluded from CGL policies because it is covered under workers' compensation insurance. CGL policies cover third-party injuries, i.e., injuries to customers or other non-employees, but do not provide coverage for employee injuries, which fall under state-mandated workers' compensation programs. Option is incorrect because the CGL covers bodily injury claims, even those caused by negligence. Option B is incorrect because CGL policies do cover property damage caused by defective products, although there may be additional endorsements needed. Option C is incorrect because CGL covers personal and advertising injury even arising from media content. Question 6. Scenario-based question. MS. Robinson owns a retail store selling electronics and recently bought a commercial property insurance policy. Due to a severe storm, the roof of her store is damaged and several items of inventory are ruined by rainwater. What type of coverage will likely apply to the damaged property under her policy? A. Business income coverage. B. Property of others coverage. C. Building coverage. D. Business personal property coverage. Correct answer: D. Business personal property coverage. Explanation: Under a commercial property insurance policy, business personal property coverage covers the property the business owns, such as inventory, equipment, and furniture, that may be damaged or destroyed due to covered peril, such as storm damage. In this case, the property of others coverage would apply if the damaged items were owned by someone else, not the business itself. Building coverage only covers the physical structure, not the contents inside. Business income coverage would only apply if the store could not operate during the repairs, but it doesn't apply to the inventory or physical damage. Question 7. Which of the following statements is true regarding the excess liability insurance policy? A. It covers claims for which the underlying primary insurance policy has been exhausted. B. It offers broader coverage than the underlying primary policy and adds new coverage types. C. It provides coverage for risks that are not covered by any other type of insurance. D. It is only applicable to bodily injury claims arising from commercial auto accidents. Answer A. It covers claims for which the underlying primary insurance policy has been exhausted. Explanation: Excess liability insurance provides additional coverage once the limits of an underlying primary insurance policy, such as general liability or commercial auto, have been exhausted. It does not expand the coverage scope but increases the coverage limit for specific types of claims covered by the primary policy. Option B is incorrect because excess liability policies do not offer broader coverage but rather only increase the limit of the primary policy. Option C is incorrect because excess liability insurance applies only to covered risks, not to exclusions or uninsurable events. Option D is incorrect because it is not limited to commercial auto accidents but applies to any claims under the covered primary policies. Question 8. Which endorsement would typically be added to a commercial property policy to cover the increase in property value during a certain time period, such as during peak seasons? A. Inflation Guard endorsement. B. Peak season endorsement. C. Ordinance or law endorsement. D. Equipment breakdown endorsement. Answer: B. Peak season endorsement. Explanation: The peak season endorsement is used to increase the coverage limit for business personal property during times of year when the value of property, such as inventory, may increase. This is common in retail businesses where inventory peaks during certain seasons, e.g. holidays. Option A refers to the Inflation Guard endorsement, which automatically adjusts the coverage limits based on inflation but does not account for seasonal fluctuations. Option C addresses coverage for legal changes affecting the insured's property, and Option D refers to coverage for equipment breakdowns, not seasonal increases in value. Question 9. What is the primary purpose of the valuation methods in commercial property insurance? A. To determine how much insurance coverage the policyholder needs. B. To establish the payout amount in the event of a claim. C. To assess the property's risk level before issuing a policy. D. To adjust the policy premium rates based on market conditions. Answer B. To establish the payout amount in the event of a claim. Explanation. Valuation methods are used to determine how the property will be valued for claims purposes. Common valuation methods include actual cash value, SEV, replacement cost, and agreed value. These methods establish the amount the insurer will pay in the event of a covered loss. Option A is incorrect because the valuation method affects claims payout, not the amount of coverage purchased. Option C and D are incorrect because these methods focus on claim payout after loss, not risk assessment or premium calculation. Question 10. Which of the following coverage parts in a commercial auto insurance policy typically covers physical damage to the insured vehicle that is not caused by a collision? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Medical payments coverage. Answer B. Comprehensive coverage. Explanation. Comprehensive coverage covers damage to a vehicle that is not caused by a collision, such as damage from theft, vandalism, or natural disasters, hail, fire, etc. Collision coverage, by contrast, covers damage from a collision regardless of fault. Liability coverage covers damage to other people's property or injuries, and medical payments coverage covers medical costs for injuries sustained by the driver and passengers, not vehicle damage. Question 11. What is the typical coverage territory for a commercial general liability CGL policy? A. Worldwide, as long as the insured's business is involved. B. Only within the state where the business is located. C. Within the United States, its territories, and Canada. D. Any location where the business operates, as long as it's covered by the primary insurance. Answer C. Within the United States, its territories, and Canada. Explanation. The coverage territory for a CGL policy generally includes the United States, its territories, and Canada. This is because most commercial liability policies are written for businesses that primarily operate in these regions. Option is incorrect because the CGL policy does not automatically cover worldwide activities. Option B is incorrect because the CGL has a broader coverage territory. Option D is incorrect because it does not accurately define the usual coverage area, which is geographically limited. Question 12. Which of the following is not a valid exclusion under commercial crime insurance policy? A. Employee dishonesty. B. Forgery or alteration. C. Theft by a third-party burglar. D. Fraudulent transfer of funds by the insured. Answer D. Fraudulent transfer of funds by the insured. Explanation. Commercial crime insurance typically excludes losses caused by fraudulent acts of the insured themselves, such as a fraudulent transfer of funds. Losses due to employee dishonesty, forgery, and third-party theft are generally covered under this policy. These exclusions help prevent the policyholder from being indemnified for their own illegal activities or negligence. Question 13. What is typically required for an insurer to consider adding an additional insured endorsement to a commercial general liability CGL policy? A. The additional insured must request coverage in writing. B. The additional insured must be a business partner of the policyholder. C. The additional insured must have a financial stake in the policyholder's business. D. The additional insured must be involved in a contractual agreement with the policyholder. Answer D. The additional insured must be involved in a contractual agreement with the policyholder. Explanation. An additional insured endorsement is often added to a CGL policy when the policyholder has a contractual agreement with another party, such as a landlord or contractor, that requires them to be named as an additional insured. This provides the additional insured with coverage under the policy in the event of a claim. Option A is incorrect because requesting coverage in writing is not the sole requirement. Question 14. Which of the following best describes the purpose of employer's liability insurance? A. It covers employee injuries that occur while the employee is off the clock. B. It provides coverage for employee injuries not covered under workers' compensation. C. It covers third-party bodily injury claims related to workplace accidents. D. It provides coverage for legal defense costs in the event of workplace discrimination claims. Answer: B. It provides coverage for employee injuries not covered under workers' compensation. Explanation: employers' liability insurance is a part of workers' compensation insurance that covers injuries sustained by employees that are not otherwise covered by workers' compensation laws. For example, if an employee sues the employer for negligence related to their injury, the employer's liability insurance would cover the legal costs and damages. Option A is incorrect because workers' compensation would typically cover on-the-job injuries, not those that occur off the clock. Option C is incorrect because it applies to third-party liability insurance, not employee liability. Option D is incorrect because it relates to employment practices liability insurance, not workers' compensation. Question 15. Which of the following is NOT typically covered under a commercial auto insurance policy? A. Medical expenses for injured passengers in the insured vehicle. B. Damage to the insured vehicle caused by a collision with another vehicle. C. Damage to the insured vehicle caused by a natural disaster like a hurricane. D. Damage to personal property inside the insured vehicle not owned by the policyholder. Answer: D. Damage to personal property inside the insured vehicle not owned by the policyholder. Explanation: a commercial auto insurance policy typically covers medical expenses for passengers. Option A, damage from collisions. Option B, and damage from events like hurricanes. Option C, under comprehensive coverage. However, personal property inside the vehicle that is not owned by the policyholder is usually not covered under the auto insurance policy. This type of damage may require separate coverage, such as renters or homeowners insurance for the property owner. Question 16. Which of the following is considered a named peril ECA commercial property insurance policy? A. Theft. B. Earthquake. C. Flood. D. Wear and tear. Answer A. Theft. Explanation: a named peril policy covers only specific risks that are explicitly listed in the policy, such as theft. Earthquake and flood are generally not covered under standard named peril policies unless specifically included as separate endorsements. Wear and tear is typically excluded from coverage as it is considered a maintenance issue, not a covered loss. Question 17. Which of the following statements best describes property damage liability under a commercial general liability CGL policy? A. It covers damage to the property of others caused by the insured's operations. B. It covers damage to the insured's property caused by a third party. C. It provides coverage for the insured's property loss in case of a fire. D. It covers any liability arising from damage to the insured's business location. Answer A. It covers damage to the property of others caused by the insured's operations. Explanation: property damage liability under CGL policy covers damage to third-party property caused by the insured's operations or activities. This coverage applies when the insured's actions or operations result in damage to someone else's property. Option B is incorrect because property damage to the insured's own property is covered under a property insurance policy, not liability. Option C is incorrect because fire damage to the insured's own property is typically covered under a property policy. Option D is incorrect because damage to the insured's own property is also typically covered under a property policy, not liability. Question 18. Which of the following is NOT covered by a commercial property insurance policy with replacement cost coverage? A. The cost of replacing damaged property with new property of similar kind and quality. B. Depreciation of the damaged property. C. The cost to repair the damaged property. D. Additional living expenses if the business owner has to temporarily relocate. Answer: B. Depreciation of the damaged property. Explanation: with replacement cost coverage, the insurer pays the cost to replace the damaged property with new property of similar kind and quality without deducting depreciation. Option A is correct because it's the essence of replacement cost. Option C is also covered because repair costs are part of the restoration process. Option D may be covered if the policy includes business income coverage but is not the standard part of replacement cost coverage itself. Depreciation, which accounts for the decrease in value over time, is not considered under replacement cost coverage. Question 19. Which of the following is NOT an example of professional liability insurance? A. A lawyer's insurance for errors in legal advice. B. An architect's insurance for mistakes in building design. C. A physician's insurance for medical malpractice. D. A business owner's insurance for theft of office equipment. Answer: D. A business owner's insurance for theft of office equipment. Explanation: professional liability insurance, also known as errors and omissions insurance, provides coverage for professionals such as lawyers, doctors, architects, or accountants for claims of negligence, mistakes, or failure to perform their professional duties correctly. Option A, Option B, and Option C are all valid examples as they address errors or negligence in the professional's respective fields. Option D refers to a type of property coverage and not professional liability. Question 20. In a business owner's policy, BOP, which of the following coverage types is NOT included in the standard package? A. Property damage coverage for the insured business. B. General liability coverage for third-party injuries and property damage. C. Business income coverage for loss of income during repairs. D. Workers' compensation coverage for employee injuries on the job. Answer: D. Workers' compensation coverage for employee injuries on the job. Explanation: a business owner's policy, BOP, typically includes property damage coverage, general liability coverage, and business income coverage, but workers' compensation is NOT included. Workers' compensation is a separate insurance policy designed specifically for employee injuries and is required by law in most states. Therefore, a business owner must purchase a separate workers' compensation policy in addition to a BOP. Question 21. Which of the following best defines a business income coverage? A. Coverage for loss of income due to employee illness or injury. B. Coverage for the loss of income due to property damage or a covered peril. C. Coverage for the theft of business assets or equipment. D. Coverage for legal fees associated with a business lawsuit. Answer: B. Coverage for the loss of income due to property damage or a covered peril. Explanation: business income coverage provides compensation for lost income when a business cannot operate due to covered property damage or a covered peril. This coverage helps the business continue to meet its financial obligations during the recovery period. Option A is incorrect because it refers to workers' compensation. Option C covers property insurance, not income. Option D refers to general liability insurance. Question 22. Which of the following is NOT a factor in determining commercial auto insurance premiums? A. The driving records of employees. B. The type of vehicle being insured. C. The location where the vehicles are parked overnight. D. The total annual revenue of the business. Answer: D. The total annual revenue of the business. Explanation: commercial auto insurance premiums are determined by factors such as the vehicle's type, Option B, the location of the vehicle when not in use, Option C, and the driving records of employees, Option A. The total annual revenue of the business, Option D, is generally not a determining factor for premiums, although the nature of the business and its risk exposures may play a role in determining coverage needs. Question 23. Which of the following is a common exclusion in a commercial general liability CGL policy? A. Bodily injury caused by the insured's products. B. Property damage resulting from faulty workmanship. C. Personal and advertising injury caused by the insured's business activities. D. Liability arising from the insured's operations or premises. Answer: B. Property damage resulting from faulty workmanship. Explanation: a commercial general liability CGL policy typically excludes coverage for damage to property caused by the insured's own work or faulty workmanship. The CGL is designed to protect against third-party claims such as bodily injury, Option A, personal and advertising injury, Option C, and general premises liability, Option D, but it does not cover property damage resulting from faulty work. Question 24. Which of the following types of insurance is required by law in most states for businesses with employees? A. Professional liability insurance. B. Workers' compensation insurance. C. General liability insurance. D. Business interruption insurance. Answer: B. Workers' compensation insurance. Explanation: workers' compensation insurance is generally required by law for businesses with employees. It provides benefits to employees who are injured on the job, covering medical expenses and lost wages, while professional liability and general liability insurance are important for business protection. They are not required by law in most states. Business interruption insurance is optional and typically added to other policies. Question 25. Which of the following is NOT typically covered under a commercial property insurance policy? A. Vandalism. B. Fire damage to the building. C. Earthquake damage. D. Water damage from burst pipes. Answer: C. Earthquake damage. Explanation: Earthquake damage is generally not covered under a standard commercial property insurance policy unless the policyholder specifically purchases earthquake coverage as an endorsement. Options A, B, and D are all typically covered under a standard commercial property policy. Question 26. Which of the following coverage types under a commercial general liability CGL policy is designed to cover claims arising from the business's advertising activities? A. Property damage coverage. B. Bodily injury coverage. C. Personal and advertising injury coverage. D. Completed operations coverage. Answer: C. Personal and advertising injury coverage. Explanation: personal and advertising injury coverage protects businesses against claims arising from their advertising activities, including allegations of copyright infringement, slander, libel, and other related offenses. Property damage, option A, and bodily injury, option B, cover different types of liability, while completed operations coverage, option D, covers liability for work performed and completed by the insured. Question 27. Which of the following would NOT be covered under commercial property insurance? A. A fire that damages the business building. B. Theft of inventory from a warehouse. C. Damage to the business building caused by a flood. D. Destruction of business records by an employee. Answer: C. Damage to the business building caused by a flood. Explanation: flood damage is typically not covered under a standard commercial property insurance policy unless the policy specifically includes flood insurance as an endorsement. Fire damage, option A, theft of inventory, option B, and destruction of records by an employee, option D, would generally be covered under standard commercial property policies. Question 28. Which of the following is NOT typically a part of a business owner's policy? BOP. A. Property damage coverage for the business property. B. General liability coverage for third-party injuries. C. Loss of income coverage if the business has to temporarily close. D. Coverage for employee injuries while at work. Answer: D. Coverage for employee injuries while at work. Explanation: a business owner's policy BOP combines property damage coverage, general liability coverage, and business income loss coverage. Workers' compensation, which covers employee injuries at work, is typically NOT included in a BOP. Its coverage is separate and must be purchased independently. Question 29. In a commercial umbrella insurance policy, what type of coverage does it typically provide? A. Coverage for employee health benefits. B. Additional coverage beyond the limits of underlying liability policies. C. Coverage for damage to the insured business's property. D. Coverage for business interruption losses. Answer: B. Additional coverage beyond the limits of underlying liability policies. Explanation: a commercial umbrella insurance policy provides additional liability coverage above and beyond the limits of existing liability policies, such as general liability or commercial auto insurance. It does not provide coverage for property damage, option C, or business interruption, option D, and it is not intended to cover employee health benefits, option A. Question 30. Which of the following is a common exclusion in professional liability insurance for a consultant? A. Claims arising from errors or omissions during the course of professional services. B. Claims arising from criminal activities by the consultant. C. Claims arising from bodily injury to third parties. D. Claims arising from property damage to the consultant's office. Answer: B. Claims arising from criminal activities by the consultant. Explanation: professional liability insurance covers claims for errors or omissions, including those arising from the consultant's professional services, option A. Criminal activities, option B. Bodily injury, option C. And property damage, option D, are typically excluded from coverage as these fall under other types of insurance, such as general liability or crime insurance.